right, here we are with Sam Kazemian, the founder of Frax, one of the largest stablecoin protocols in DeFi. Sam, it's great to have you here on the Defiant podcast. Welcome.
It's great to be here. Thanks for having me.
So there's a lot going on in Frax that I want to get the details on. One of the biggest changes is you're upgrading or relaunching your main product, which is Frax stablecoin or FraxUSD. So we'll get into all the details of that. But to start, I'd love to just get to know you and Frax better and start from the beginning. Like, what's the founding story of Frax? What's the motivation behind it? And also, if you can get into how it aims to differentiate from other stablecoins in crypto.
Yeah, for sure. So for people that don't know, like I actually got into crypto a really long time ago, over a decade ago when I was in college at UCLA. I started mining like Bitcoin, and Dogecoin was a big one when it was launched. And then I started my first company when I graduated, and it was basically the decentralized version of Wikipedia on the blockchain. It actually has a token called IQ. And then as we built that and it's a profitable entity and organization, one of the things I started realizing, this is before the word DeFi even was a word, like people didn't use that word at all. It was that stablecoins and what would become known as decentralized finance is basically the third kind of $1 trillion opportunity in crypto after Bitcoin and Ethereum, like those assets, right? And so the most interesting part about it for me was, how do you actually bring dollars on chain and actually make it so that it is the best, most optimized design possible? And so like with Frax, we were one of the first to launch like a scalable decentralized stablecoin, and obviously as the market and demands for stablecoins changes and grows, both in terms of institutions but also normal users, the kind of design decisions and the design optimizations also changed. And so we actually have FraxUSD, which is the newest stablecoin that we're launching. I call it an upgrade because everyone can take their essentially legacy Frax stablecoin and upgrade it one-to-one to FraxUSD. And it's a really exciting new stablecoin that has both redeemability with fiat, right? So basically, this is backed by BlackRock and SuperState, SuperState being Robert Leshner's RWA company that he started after Compound. And we're really excited to partner with these like world-class tier one institutional custody solutions. And then the FraxUSD stablecoin can actually be redeemed from any of these places if you have an account from them. So it's actually even more interesting because imagine a USDC or Circle that can't be shut down by just stopping a single point of entry, like essentially like Circle as a corporation, right? But there's multiple places, right? You'd have to essentially go into every single place that has this integration that we call it enshrined custodianship of like FraxUSD minting and redeeming, and you'd have to stop it there. Like for example, we're also looking into bringing on enshrined custodianships between certain entities that are like based in Hong Kong, for example. And so like if you have to shut down, if you want to shut down, if you're like a state level actor or some regulator or something, and you want to shut down the stable, you have to actually stop it there too, because otherwise people can just mint it from that custodian, and then it distributes there as well. So you kind of makes it so that because you can't shut it down in that way, you might as well just let it stay. And then also minting and redeeming FraxUSD, it actually allows you to literally KYC with any of these entities, right? So all of these entities are able to actually still have their regulatory pipeline and their regulatory process for people that want to mint and redeem from them, right? So you have your pick instead of, like, for example, if Circle doesn't want retail to, for example, have accounts under a certain size, then you can't ever redeem USDC. You have to go through whatever is the options. Right now it's like Coinbase, right? But with this, you can actually have a direct relationship with a large number of essentially real world institutions. And then there's the second part of like the FraxUSD stablecoin that we can talk about later, which is like the yielding portion, which is also equally as exciting.
Let's take a step back. So you describe how one of the features of Frax is that it can't be shut down and censored like other more centralized stablecoin issuers. An example is Circle, which issues USDC, the second largest stablecoin. Obviously, Tether, the largest stablecoin, is also issued by a centralized entity. So was that your initial motivation to create a more decentralized way to create stablecoins?
So yes and no. I actually like to say that I'm the first stablecoin maximalist and like a stablecoin historian, because I've actually studied like stablecoins from the very, very beginning, which is what actually got me interested in working on Frax. And the original view, for listeners that don't know, like the actually original thing for a decentralized stablecoin was this white paper by Robert Sams called Signage Shares. In fact, that's what the Frax governance token is. The lore is that it's colloquially named after Signage Shares. It's called the Frax Share token, FXS. And so the first idea of a decentralized stablecoin was basically in 2014, where it's actually a great white paper. I actually think of it as the Bitcoin white paper for stablecoins, which is Robert Sams proposed a proof of work blockchain, because back then Ethereum wasn't even out. Proof of stake wasn't really a big thing. And there's two coins, stablecoins and shares. The stablecoin had some price oracle inside of the blockchain that it would target, and then the shares token was just volatile. And then the blockchain would essentially every block, if the stablecoin was below a certain price, it would mint share tokens and auction it for the stablecoin token, right, to contract the supply. If the price was above the oracle target, then it would actually mint new stablecoins. But where would you give it out, right? It's a decentralized blockchain. You can't just give it out to human beings. So you'd give it out to people that the addresses that hold the share tokens every block. And so the share tokens were valuable because they had the future expected cash flow of like signage increases, right? And that's where actually decentralized stablecoin comes from. Like it's all just downstream of this idea. And then eventually MakerDAO created this like over collateralized loan system with DAI, right? A few years later. I actually think that now the most immaculate design for a stablecoin is not just this kind of concept or like a decentralized version. It is what I call the best of both worlds design, which is that the stablecoin needs to be redeemable and it needs to have the ability to interface with the real world. We're no longer in a place where like blockchains are like, shadowy things where like you hold your coins on a USB stick. It's like the US government might buy Bitcoin, right? Like this is a totally different decade era. And so the most interesting design for a stablecoin, and in our view, or at least in mine, from studying all of the history of it, is that you need a stablecoin that is integrated into institutions so that it can be redeemable at all times with a dollar. And this is important because the stablecoin needs to be able to be integrated into centralized exchanges, payment processors, credit cards, all of this stuff. And so people can actually know that they can redeem this thing for like $1.
For actual like fiat currency.
Yes, exactly. Okay. From institutions like BlackRock, like SuperState, like other one like actually I didn't want to announce this yet, but we are going to do something with Paxos where you can actually redeem and mint FraxUSD with Paxos, right? And so literally it's like a representation of $1. And if you notice, the year's 2025, right? Decentralized stablecoins haven't actually been making inroads and getting integrated in like payment apps or anything as much as Tether and USDC, because you can't just look at an oracle on chain or in a curve pool or like something and be like, hey, how much is this actually worth? Is it worth 0.996, or is it 0.991, or is it actually a dollar? That's not how the real world works. You either have a dollar in the real world or you don't, right? And so the best design, again, is what I call the best of both worlds design, which is it actually is a real dollar and representation of one. And it can be integrated in the real world everywhere. That's the only way to catch up to and maybe overtake Circle and Tether. And then the second part is the yielding part, where on-chain...
Sorry, before getting to the yielding part, can follow up on the redeemable part. So that means that to redeem for US dollars, that means that you would have to hold US dollars in custodians and banks. So that's been a reason for potential, censorship and also depegging risk. Like we saw what happened last year with obviously USDC and the whole banking crisis in the US, where all the crypto tied banks went under or lost their licenses, and Circle had dollars there and USDC depegged, and it never has quite recovered from that episode. And so obviously holding actual dollars has huge benefits, but there's also that centralization risk that what happens if something goes wrong with your custodian. So how do you think about that issue?
Yeah, I mean, definitely. The only way to be 100% safe is to just have a direct account at the Federal Reserve, right? Which is a Fed master account, right? Which is basically if you just store dollars and then tokenize those, right? The Fed is the issuer of the actual currency. The Fed can't, by definition, itself default,
Shut itself.
Right? Yeah. So I think that, we are actually looking into being, especially with this new administration that's very, very pro-crypto. I'll actually be at the inauguration this weekend with the crypto events and then the inauguration. So we're actually exploring if there's ways to just directly issue FraxUSD through a Fed master account. So if the Fed itself could just be like a custodian.
That'd be amazing for stablecoins.
Yeah, I mean, then it'll settle all questions like you're saying. But in the near term, I think there's probably no better bankruptcy remote, which means settled and separated funds from other assets. Bankruptcy remote, protected, and professional institutions as BlackRock and SuperState, which is Robert is one of the most well-regarded people in all of DeFi, right? And so I think that these are really, really important tier one institutions and people, and they hold these short-dated T-bills in trust-separated accounts that do not take risk, that are separate from the credit risk of the actual entity, right? Like BlackRock itself or SuperState itself, right? And they don't actually behave like a bank, which is what Silicon Valley Bank did, right? It takes deposits and it lends them out, and then it realized, oh crap, the long dated T-bills and long dated loans are not actually worth as much as we thought, and then there was a bank run, right? This is not what's actually happening with any of the treasury bills that the institutions that FraxUSD is onboarding with, like SuperState, like BlackRock, like Paxos, as you guys know too, right? They just hold these T-bills on behalf of the token holders of the stablecoins, right? And this is in TradFi called bankruptcy remote, which means like if the actual company declares bankruptcy, the stablecoin holders are essentially first in line because the assets were held on behalf for them, right? And so the way that we've built this is that the custodians that actually can get onboarded through Frax governance, right? Like the FXS holders will vote, which they've already passed SuperState and BlackRock. They go through to a governance process and risk analysis to make sure that everything makes sense, right? And that everything is actually as professional as it needs to be. And so the representation of assets that are held by BlackRock and SuperState are in their own respective tokens. People might have heard of BIDL. People probably have heard of USTB, which is SuperState's assets. And so these get held inside smart contracts, FraxUSD custodian smart contracts, and anyone that is KYC to be able to take those assets is able to interact with those custodian contracts on the blockchain, right? So if you have a SuperState account, you can actually send that smart contract USTB and mint FraxUSD. Or you can actually send it FraxUSD and take out USTB, which represents T-bills, right, in the custody of SuperState. Same with BlackRock.
So when you redeem, are you redeeming BlackRock's fund token, BIDL, and SuperState's token, or are you actually redeeming US dollars?
You can do both, right? Because in order to touch either of those tokens, right, you need to have an account because they're whitelisted tokens, right? Those are securities that are, like I was saying, custodied professionally by bankruptcy remote entities, right? And in order to do that, you need to KYC with BlackRock or SuperState or Paxos later on and other entities. And so when you're able to do that, as soon as you swap for the actual token, you can also swap directly into a wire to your bank account, right? Because you're actually whitelisted with those entities, right? So you can actually do both. You can swap for fiat that gets wired, or if you're like, I want to wire in funds, right, and then turn it into FraxUSD, there's actually there will be a user interface where you can just simply send wire and then get out FraxUSD to your address.
So when these systems actually matter is at times of crisis. It's like, okay, when you say, something's wrong, I need to redeem my stablecoins for dollars. And in those times, how is the, is there any execution risk of not being able to KYC fast enough, or actually there being enough liquidity to swap BlackRock's token or SuperState's token for dollars, or just like all the steps required to actually, be able to redeem? I don't know, seem like it would be a lengthy process, or maybe I don't know. Like what's kind of the execution timeline and risk there, if there is a black swan event or a bank run?
I mean, it's a good question. How many people do you know personally that redeem Tether stablecoins on Tether.2 from Tether?
I don't know anyone personally, but I know that whenever there's like depegging fears, and definitely I felt it in the USDC depegging when I was holding USDC. Kind of that fear of, okay, what happens if if the price of this token keeps falling? Like, do I have a last resort to actually exchange this for US dollars? So I think kind of the knowledge that you can do that in an actual feasible way is what maintains a stablecoin stability. Even though like 99.9% of holders and 99.9% of the time it's not needed, it's like, okay, the knowledge that you can do it.
Well, yeah, so exactly. Most people don't even have a Tether redemption account. And to be clear, Circle messed up. Circle put their money in a bank which can go under. Obviously, it was bailed out by the FDIC, and so it didn't go under. So, USDC repegged that following Monday. But Circle messed up. They should have never have done anything like that. And you'll notice Tether didn't depeg during that weekend or anything, right? Because they didn't mess up. They didn't have their a bunch of their funds in bank deposits. They had them in T-bills, right? And so T-bills, the only thing that could happen is if the U.S. government defaults on its debt, not a bank. So first thing is, there's no way that what happened to the USDC SVB banking crisis would happen with FraxUSD. That mechanism is just, there's no cash in banks designed for it in that way. And the second thing is that it's actually great that there's multiple custodians like SuperState, or if you don't want to do it with SuperState, you could do it with like BlackRock and SuperState. If you don't want to do it with them, you could do it with Paxos and others, because unlike, as you were saying, unlike Circle, when you were holding it and you're like, oh, well, I don't have a Circle account, I don't know if I can do this fast enough, you have the ability to pick from multiple places that actually can mint or redeem, right? And so if you actually have a Paxos, account, you'll be able to do that. If you have like a SuperState account, you'll be able to do that. If you're in Hong Kong, for example, and you don't have American accounts, when there's a custodian in Asia, you'll be able to do that, right? And so that's actually a very, very big improvement over the current landscape for minting and redemptions. But the main thing I want to say is, when that's possible, you won't have to do it. Or like you said, 99% of people that you said you knew don't actually redeem, Tether, but it's always $1. That's actually the beauty of the efficiency, which is that most people won't ever have to redeem FraxUSD because other people will be able to do it for them. But it is the most widely available. Once it'll be out, once it's all of the custodians are available, it is going to be the most accessible. And the last thing I'll say about that is, there's actually a network effect there, if you think about it, right? Which is, if you're a custodian, right, like if you're like BlackRock and SuperState or SuperState or things like that, you do want BIDL to grow in TVL, right? And you do want like USTB, the assets that you custody, actually growing, right? Because you actually hold those assets. It's good for your bottom line. And so you're actually kind of incentivized to get FraxUSD integrated in places like your network, right? Like if you're, for example, like SuperState, you probably would want FraxUSD to be integrated in the exchange that you use for doing the carry trade, right? They have a carry trade product that we're actually also beginning to integrate, right? Which is like this yielding carry trade contract, and they use USDC for that wherever they do the carry trade, right? But if they actually work with the location to get FraxUSD used instead, the demand for FraxUSD in that venue will increase the amount of USTB, the T-bills that they hold, right? Because they just get the T-bills when people mint FraxUSD. And so there's this really interesting, this like feedback network effect of aligned incentives with everyone that has the ability to mint redeem FraxUSD, because they have an incentive to increase its demand and then thus increase the assets that they custody for it.
Interesting. Okay, cool. Now let's talk about the yield aspect.
Yeah, so obviously DeFi stablecoin is complete without a yielding version, right? So there's obviously going to be FraxUSD, the yielding version, and the goal with that, that's the second part that I call the best of both worlds design. So we kind of went over how it's mint redeemable now. Now we go over how it has the best benchmark yields in DeFi in all market conditions, right? The main way that it works is that you can just stake your FraxUSD into the FraxUSD vault and you get out the token. This is a yielding stablecoin. It actually yields at the three strategies that are always employed and the best of those. So I call it the triple prong strategy, which means if the carry trade is the highest in the market, like everything is very bullish, FraxUSD yields the basis rate, and that's through partnership with both SuperState and Athena. So actually, we actually have a relationship that everyone kind of knows. Athena does very good carry trade yields, right? This will get the same exact yields either through SuperState or through Athena's pipeline. And the second thing is if the carry trade is not actually extremely high, like right now it's kind of medium, right? It's around 9%, as we're talking. You have higher DeFi yields, right? Over collateralized loans, things like that actually yield higher. What we're able to do is we're able to tap into that by actually having part of the FraxUSD collateral base be over collateralized loans. And then that yield and interest goes to FraxUSD holders, right? And so that's actually the second part, the second prong of the strategy. And the last one is the most obvious, which is if everything is bearish and the T-bills are the highest yielding like it was in 2023 when everything was very bearish in DeFi and on-chain, everyone can know that they can actually get, at minimum, essentially the risk-free rate, known as like the short-dated treasury bill rate. And so you have this yielding stablecoin that in all major market conditions can give you the best yield for that market condition. So you can essentially hold your cash in this yielding stablecoin, and it has the best risk-adjusted yield. Not saying there's no risk, right? But the best risk-adjusted yield possible in DeFi, in crypto, in every market condition. So now you have this overall design that's redeemable and good for payments, and you have a yielding version of the stablecoin that is very high yield, as high as can feasibly be for the risk-adjusted benchmark yields.
And how do you get that yield? Do you have to stake the stablecoin?
Yeah, you just take FraxUSD and you exchange it for FraxUSD, which stands for staked FraxUSD. So it's in a technically an ERC 4626 vault, right, which increases the price that you can redeem for the underlying. And let's say, for example, let's say that there's 1 billion FraxUSD, right, and then let's say that there's 300 million staked as FraxUSD, right? So 30% of the supply, right? We take that 30% of the supply, right, that the FraxUSD in that vault, and we distribute it to the strategy that is the high adjusted yield, right? So for example, if it's carry trade, that underlying goes to the carry trade, and then it gets given back to FraxUSD holders. If it's something else, it'll go over there. And so that's how it works. So then basically at all times you can basically know that the underlying is fully backed, right? The underlying is fully redeemable, and then also the underlying is going to a good yield source if you hold FraxUSD. And
how do you decide which yield strategy to use?
Well, it depends from the three-pronged strategy that I was referring to. It just depends whichever one's higher. That's why I was saying that it's the best risk-adjusted yield in all market conditions. It's simply whichever one is higher at that time, right? And because all three of those things are pretty much industry standard now, right? The carry trade thanks to Athena, DeFi yields thanks to Frax and Maker, right, from like the previous cycle, those kind of yields, and T-bills, obviously.
And what do you use for DeFi yields for collateralized loans?
We use FraxLend and Aave. So FraxLend is our own CDP system, and then Aave on Ethereum mainnet and some other lending protocols that might deploy on Fraxstool, which is Frax's high performance L2. So maybe Morpho, if they have a Fraxstool deployment, maybe Aave on Fraxstool as well. So it depends.
With this new upgrade of FraxUSD, is this going to be your main focus going forward? Because I know that you have other assets as well. Are you also continuing to develop those, or again like just focusing all resources on this upgrade?
Yeah, I mean it's a good question because a lot of people don't really understand Frax, or they think it's a bunch of different products. We call like Frax the decentralized central bank of crypto, and like what I mean by that is the most important thing for us is to expand the currency, our flagship FraxUSD stablecoin, and build a digital economy. And so that's why we actually have Fraxstool, which is our high performance L2. It's a general purpose DeFi high performance L2 with a lot of new and unique features. And we actually just released the roadmap for it last month too. So essentially, that's kind of, you can think of it like the digital nation, right? Like of Frax, and the Frax economy is based there. And then the stable coins, or the currencies, we also have an LSD, Frax Ether. These are exports of the actual digital nation of Frax, right? And so if you think about, a lot of people say the United States' greatest export is the US dollar, right? Because we don't currently manufacture a lot of stuff, right? It's built in China, but everyone in the world uses US dollars. So like our product is the US dollar. And so you can kind of think of the Fraxstool blockchain as the nation of like Frax, and then the FraxUSD stablecoin, and Frax Ether or LSD, and like these currencies as the export, right? They're on multiple different chains. FraxUSD will be on many chains like Ink, Sonic, Movement is a big chain that's launching. And so like all of these can benefit from FraxUSD, its redeemability, its high yields, and its ability to go from chain to chain, kind of like a faster version of Circle's CCTP. And so FraxUSD will have a cross-chain one-to-one messaging, and making it the most useful kind of dollar for like all purposes. So to kind of answer the question directly, is that the most important thing for us is our currency and our blockchain, right? Like that's like the main thing that we think about. And so like the Fraxstool economy, as I like to say, people in crypto like to say the ecosystem, but the most important thing is the economy of like a chain, right? Like if it's just a bunch of people talking on like Discord or something, that's kind of cool, but it's not an economy, right? What you need actual economic activity, and like an ecosystem usually, but not always, creates a lot of economic activity. So what I like to say is our biggest focus is building the Fraxstool economy, and fostering a lot of builders on the Fraxstool chain, and then also exporting the currencies, the FraxUSD stablecoin.
So how do you hope, or how are these currencies being used? Like to generate economic activity, you need for these currencies to be, for there to be transactions using these currencies. So what's that looking like?
Yeah, so when Frax launched in 2020, the last cycle, we actually went, our highest market cap in the prior cycle was around 3 billion. So we were actually, it was basically DAI and Frax, and then Terra, which that shall not be named, in terms of how the stablecoin size. And I think that now, in this cycle and this year and like going forward, the right design for a stablecoin that actually is going to get to 10, 20 billion and above in like the next 5 years needs to be something exactly like FraxUSD, which is kind of similar to like Athena's USDE, right? They also have essentially custodians like Copper. Their token is essentially redeemable, and then they have a yielding version, which is very high yield, right? This design is the most important. And so I think that where FraxUSD is going to be used is going to be obviously on-chain, the yielding version, and it's going to be on Fraxstool and Ethereum, and then all these other chains that we're issuing through our own system powered by L0. And other than that, I think the most important thing is to consistently increase like liquidity, the ecosystem for it, and basically make sure that people know that this essentially FraxUSD can do everything and more that they're used to in fiat coins, but it can also do everything that they're used to in decentralized stablecoins, particularly distributing yield that is a great source of on-chain savings.
There's a bit of tension there, I think, between using a stablecoin for yield and how usable it can actually be in, quote unquote, the real world, like for payments or for trading or for lending or more kind of non-investment use cases, because you can stake, right, and get yield, and then you get kind of that derivative to represent that, but that usually doesn't have as much liquidity, or doesn't, hasn't been incorporated to as many payments or payments rails or centralized exchanges. Like, you don't have the same ability to use it as actual currency once you stake it. And then there's the other use case, which is, like I mentioned, like all the other kind of more like real world payments use cases that you would use like just a regular like fiat currency, like a dollar with. So what's your view there? Because I think it's hard for a stablecoin to try to do both, and maybe with this new kind of design that's optimizing for yield, is FraxUSD becoming more of akin to holding like an investment fund rather than like a payments instrument?
No, not at all. I mean, that's why we're working with BlackRock and SuperState to hold T-bills and in the most professional way. So that's why there's two stablecoins, right? There's FraxUSD and the staked version as FraxUSD. And like I was saying in the example earlier, the places where the underlying goes is only the actual amount that is staked in as FraxUSD, right? And so if you have FraxUSD stablecoins, right? Like the stablecoin that is redeemable, the stablecoin that is bankruptcy remote, custody held by the most professional tier 1 institutions, you can know that you can always redeem this for $1 of value from the likes of SuperState, BlackRock, Paxos. And so that should actually, I mean, just logically thinking about it, right? That should be the best guarantee possible, right? In terms of being able to use this as a currency, right? Like you were saying with USDC, like with USDT, right? They don't pay yields, right? But you know that you can redeem them at any time, which is why they're very useful. And so you can actually know that with the giving up of the yield, what you're getting is cash redeemability, cash parity. And like you said, people like that. That is a value, that's something you pay for, right? In like giving up yield. Now, if you stake and you're saving in it, I mean, you're earning the right there. There's no free lunch, right? If there is, then someone's lying to you somewhere. And so you can unstake later, right, to use it as a payment system. But if you're saving and you're just holding this in your wallet, you do that and you earn the best yield, and then you unstake for the underlying that has the cash and T-bills, right, custodied, and so you're able to redeem at all times. That's why I kind of call this the best of both worlds design, because if you think about it, there's no other way you could design it, right, that actually does this and addresses the exact problem which you're right about that you were raising, right? Like generally until kind of Athena and now FraxUSD, things have been either DeFi yields and non-redeemable, which is why I was saying they're usually not integrated in payments or centralized exchanges or like these kind of things, or it is no yield, but cash equivalent, right? Like Tether, Circle, fiat coins, right? And so now this is actually one system with both of those advantages.
How do you think that stablecoins can increase their become more ubiquitous in traditional finance and payments rails, because they've definitely made huge inroads so far, becoming one of the biggest use cases or most successful use cases in crypto. But I don't think they haven't reached real kind of mass adoption yet, where like everyone is using stable coins for payments and savings and so on. What do you think is missing?
Yeah, I mean, that's I think the next level, right? Like, in order for stablecoins to really be the next $1 trillion opportunity, like I was saying, after Bitcoin and ETH, the entire world or most of the major economies have to underlie a decent amount of their transaction savings in stablecoins. And so the main thing I actually like to say is like, there's probably about 100 million, maybe more, just about people that use crypto, and I use that really liberally, like people that use Tether and like the emerging economies, people that are degenerates on chain and all this stuff, the main thing is everyone's fighting for those people right now, right? When like a new protocol launches, they're like, oh, farm me or this chain and stuff, and it's higher tokens given out than before. There's not that many new people, or the new influx is kind of slowly ran out, right, from like last cycle when everyone was getting into NFTs and stuff. And in order for the next 1 billion people to get into crypto, they have to actually have entryways and real ways to get both on-chain and also hold stablecoins easily. Right, that I think stablecoins are kind of the gateway drug to the blockchain, and it's the most useful, it's the most relevant. It is basically the most important gateway drug for the adoption of crypto into like the next billion people, like new people. And in order for that to happen, people have to have new entryways, which is why we're building FraxUSD in this way of giving new entryways to institutions, to custodians that are geographically diverse, right? That can essentially mint, redeem, and bring people on and off the blockchain. And that's the most important thing. Imagine, for example, if American Express was a custodian with FraxUSD, you could just essentially have a balance of FraxUSD as a Amex card, for example, right? And instead of trying to manage that directly, you could just manage that through Amex itself, right? Then all of the users of like American Express, they have the ability to essentially have funds on chain. The only way for this to actually get to the next 1 billion users is for that stuff to happen, not like some new mechanism of stability that some person develops and stuff. I think most of the things, 95% of the things in DeFi, probably, I'm not going to say, and never say never, right? I'm not going to say there's never going to be a 0 to 1 thing, but most of the mechanisms have been probably discovered, right? And now it's incremental improvements and integrations with the real world. And that's the only way that this is going to, happen, is that there's going to have to be, gateways to stablecoins in places that there hasn't been before.
What would be a real game changer? Like people just holding stablecoins directly in their bank accounts? Like, I don't know, I get my salary in my Bank of America checking account, and maybe one day I could get my salary in stablecoins directly into my bank account. Or
I think like basically that, but also honestly, I'd go even further just to say, there's like there's that Neo meme for Bitcoin where it's like you're saying I can sell my Bitcoin for $1 million someday, and then like the response is like, I'm saying you won't have to, when it's like, $1 million or something, right? And I think that the point is like, you won't have to actually hold stable coins in your Bank of America account. you can like eventually what'll probably happen is so many places will accept like, you know, Amex cards that have stablecoins under them, or like they'll actually accept direct, you know, stablecoins like FraxUSD, USDC payments, that the most like places that are unlikely to include stablecoins like Bank of America, you won't actually even have to receive anything in there. Right, like you won't actually have to, it'll actually, the world will change in a way where like the most unlikely and resistant to change entities,
they just stay behind.
Exactly. And so like you won't have to actually receive your salary in your Bank of America.
So maybe you'll just get your salary in a more, you know, crypto native, maybe like a fintech who is more open to getting a crypto, and then that person will be able to connect that account to a credit card or a debit card where they can directly use crypto in different, you know, payments systems that are integrated with crypto, and that's how kind of it slowly starts to seep into just like, you know, mainstream use cases.
Exactly, right. Like I think like, especially with the new administration in the US, right? Like new fintechs will come up and they'll really take off, right? Or even maybe new like neobanks that are stablecoin centric rather than old school like, you know, Bank of America or something, right? And they will actually just take all of the relevance, right? And like you already actually see, it's kind of interesting, like even stuff like World Liberty Financial, right, which is like kind of affiliated with like the Trump administration and stuff. They essentially actually have a lending and credit and saving system that is KYC. So it's like a professional kind of system where people can actually deposit USDC, hopefully FraxUSD soon as well, and like other things, and they could just save there, right? And then this is actually like affiliated with the current president of the United States,
yeah,
right?
It's crazy.
So like if you know, you kind of can, you know, like dot the lines and see where things are going, right?
I guess like the last step is just like being able to pay taxes with crypto, and if the US really does have a Bitcoin reserve, then maybe we're not so far to being able to do that, at least in the US.
Yeah, it'll be really interesting. I'll see how the inauguration weekend goes when I'm in DC this weekend.
That's exciting. We're living wild times. So and more like in the near term, like your milestones that you're working towards. You mentioned that you just released your 2025 roadmap. So what's that looking like for both the stable coins and the chain?
Yeah, for sure. So as I said, our two biggest focuses are essentially the FraxUSD stablecoin and the Fraxstool high performance chain. And so there's a few big things coming. One is the upgrade of the chain to almost essentially real-time blocks and extreme high performance, and also making FXS the gas token and a new token upgrade for FXS that gives it new utility as like the chain token. Essentially, think of it like a blockchain token and a DeFi token. So that's going to be very cool. It'll basically be the Frax share token will be essentially the entire token to run validators of the Fraxstool chain, govern the DeFi ecosystem, right? Like what custodians are able to mint FraxUSD, for example, right? And all of these things. And then also earn multi-token rewards and revenue from all the places in the Frax economy, as I was saying, right? The blockchain fees, the stablecoin fees and income, as well as some other new utility that we're launching. So it's going to be really, really cool to have a high performance, essentially a sovereign chain. I like to call it a sovereign rollup. And a ecosystem that is one of the most important stablecoins in crypto. So it's going to be an exciting few months for us.
Nice. Where is the layer 2 based?
It is a layer 2 of Ethereum. It uses OpStack, but heavily modified and upgraded performance of OpStack. We are part of the superchain, although we're pretty customized in terms of how the chain works. The gas token, for example, decentralized validators that are coming in this upgrade and next, and then also I think I would say for right now, the highest benchmark speed and lowest cost of any of the L2s and the superchain. So we're targeting things like Mega ETH speed block times, as well as we're working with Rise, which is another L2 that's high performance, to actually design this technology so that Fraxstool is actually one of the highest performing EVM ecosystems. But yeah, we are essentially a sovereign roll-up of Ethereum.
And is the idea for Fraxel to be like a DeFi focused chain, or is it what's kind of the big vision for it? Is it kind of like in service to your different stablecoins, or do you want it to be broader than that?
No, it's definitely much broader, and it's an ecosystem chain. But obviously, our like ethos and like what people know Frax for is like being part of like the OG DeFi landscape of kind of Ethereum, right? And so there's a lot of DeFi OG protocols like Curve, Convex, Balancer, Velodrome recently, all of these teams that have deployed on Fraxstool, and then also a emerging AI DeFi ecosystem with tokenized agents. The IQ AI team and others are building like tokenization agents similar to like virtuals, but with DeFi focus. So it's pretty broad, but obviously the core, right? The core guiding light is, DeFi and the decentralized central bank of a digital like economy. But we definitely think that in the long term, Fraxstool will be one of the most systemically important chains in the next like 5 years, right? Like in the longer arc of crypto, it'll be one of the most stable and reliable economies. I like to use the word economy rather than ecosystem.
Super interesting vision. It's really becoming just like such a competitive race in the L2 space. Like so many chains, being created with even like major companies, like we saw yesterday with Sony, although that didn't go so well. But it's just an example of just how that space is blowing up and how you need to provide something super unique. So yeah, will be really interesting to see how your economy develops.
Yeah, definitely. Super excited for it. I think we have the best like way to actually like conceptualize it, at least I think, which is like you were saying, there's the competition or like the options are vast, right? And so at the end of the day, it's actually about useful economic activity, right? That's what people will actually gravitate towards, and then that's where they'll build even higher order things like fun stuff, NFTs, games, and all this stuff. Is that it all depends on base economic primitives and activity that is useful, right? Even like the GameFi chains or NFT chains and stuff, they're anchored to Ethereum L1 or like they're an L3 of like a big like roll up or something, because those roll-ups have important DeFi liquidity based economic activity. If you just are like sitting in the middle of nowhere, right, you can't actually run a chain that doesn't have relevant economic activity. So our view is that like Frax is a digital nation, kind of like a network state, kind of like what Balaji likes to say, and then the economy is the size of economic activity that is happening on the chain and with the currency.
Definitely makes sense. And then lastly, for people who want to get started with Frax, where should they go? Like if they want to start staking or just using Frax stablecoins?
Yeah, literally just frax.com, Frax.com. In fact, we released a totally new interface called the Universal Interface, the Frax UI. And so you can do that all just on frax.com. It's just extremely simple. It's just like a swap interface for bridging, swapping, earning. You can see the different things that you can do, and it's extremely streamlined for the next 1 billion people in crypto, right? And then you can always reach out to me on Twitter or Telegram at Sam Kazemian, just my name, and I'm always around.
Amazing. Thank you so much, Sam. Really interesting to hear all about Frax and excited about where you're going.
Thanks for having me.